Hi everyone, Crypto Watch here with another video. Today we're going to be talking about the order block strategy. What is an order block strategy? The order block strategy consists of two candles just start at the bottom or the high. Bullish in scenario, we've got the bottom two candles. In the scenario of a bearish bias, we've got the two top candles and the local high. And to implement this strategy, I've personally tested this strategy 100 to 200 times before implementing in my daily trades, as you should do just before you implement this trading strategy. You gotta back test it personally 100 to 200 times to make sure you've got the best results in your daily trades. So the order block strategy would consist of a step-by-step identification. First of all, we're going to be looking at the price action, the daily bias. Right. Secondly, we will be looking at the change of character. Then we've got the liquidity levels, and then comes our order block. To identify the order block, we've got to go through a few steps. And this strategy is actually successful in all sorts of markets. You've got Forex trading, you've got stocks trading, you've got crypto trading, any sort of market structure, market condition. I would highly prefer order block strategy over any other strategy. So as we all know, when the market is ranging, that's one of the most hard conditions to trade. Right? As you can see, Ethereum is ranging at the moment. We're going to be looking at Ethereum chart to read the order block strategy. So Ethereum is ranging at the moment. That's one of the hardest conditions to trade. And that's one of the reasons I chose Ethereum, just to see how successful this strategy is. So when you're going to sit on the chart for your daily trading, first of all, we're going to see the bias. What's happening in the market? We've got the lower lows, we've got the higher highs, all that stuff. So as we can see, this was the swing low. Swing low was made by Ethereum at around 23 to 30 range. And then we had a change of character. I'm going to write that down real quick. Change of character followed by retracement. We had the price retraced after successfully making a higher high, a successful retracement, and then we had break of structure. As you can see, the price, the 4-hour candle close above the previous high. That's what the break of structure is. So now we've got the change of character, we've got the break of structure, we've got a higher high, and now we're going to be looking for our entry. Now, the retail traders, what they would do, they would be entering somewhere around this area. This is an order block. This is an order block, but I wouldn't be entering in this area because we have got a lot of liquidity here. Now, for this strategy to work, we gotta identify the liquidity levels, clear sweep of the liquidity, and after that we will be entering in our trade. So after making the high, a lot of people would be entering on this order block here, which is not preferred at all. So we would be entering on the extended order blocks. This is our main order block here. So we're going to have a liquidity sweep of this area, which is the equal lows. A lot of liquidity sits around equal lows and equal highs. because most of the retail traders would put their stop losses there and the price would just go right through it. So if you've got a successful liquidity identification, and we're going to wait for the price to sweep this area here, and below the liquidity sweep we have identified our extended order block with the 4-hour candle. So the order block would consist of two candles. Most of the time it's a green and a red candle together. In our scenario here, we've got two green candles just at the bottom here, and this is one of the order blocks where the price saw a massive hike towards the upside. So in a scenario where you're going to take a trade, this is how we will do it. We will enter just right where the order block candle's wick is, just right here, as we've identified with the highlighter, and a stop loss below those candles. Now, our target would go up to the previous high, giving us a risk to reward ratio of 1 to 3, 1 to 4, which is pretty good. I wouldn't be entering a trade where I would get 1 to 2 or 1 to 1 risk to reward ratio, because that's just not the profitable way to trade. So the whole purpose is to get at least 1 to 3 risk to reward ratio for us to get a good profit over the time. So when you get a 1 to 3 risk to reward ratio, you would get, even if you lose 2 trades, you would still be profitable. So you would only need 35 to 40% win rate in your daily trading to actually get to actually be profitable. So we're going to be targeting this the previous high, entering on the order block here. Now there's something wrong here, which is the stop loss. The entry at 24.23, stop loss sits at 23.39, which is massive. So if you're gonna go along with 10 Ethereums or 5 or 1, losing hitting the stop loss would result in a substantial loss. So to avoid those losses when you hit the stop loss, we're gonna be narrowing down our entry and stop loss. So from the 4-hour chart, we'll be shifting to a lower time frame just to identify the sniper entry, a good order block that we can actually enter for our. So in the 1-hour time frame, we're looking at this order block that was made just at the retracement before the price started pumping, before the real price action. So I would still not be going with the one hour time frame, because the stop loss still sits on a massive difference from our entry. We're going to be shifting to the 15-minute. Now that way we can actually say that the price retraced to this price retraced, and we've got a bullish and a bearish candle. So in this way we've pretty much narrowed down our stop loss and our entry. We will be entering on the order block, the candle of the order block stop loss just below the bearish candle. We're going to be narrowing down our entry down to 2395, stop loss at 23540, which is a pretty good risk to reward ratio. Even if your stop loss hits, it's not as bad as the 4-hour chart and the 4-hour entry. So now we're gonna wait for the price to come back to this level. Now we're gonna see the price actually broke down and made lower lows before taking the liquidity just over here. Liquidity was taken. The price came to order block. Along with the order block, we had this order block built on the 19th of May, Monday, and the price came up to the same order block on the 5th of June, Thursday. So this is the swing trading, or you can say you got to be really patient for swing trading. I'll be showing an example of scalping as well for this strategy to work. As I said, this strategy would work in pretty much every time frame, every market condition, and in all sorts of markets. So as you can say, if we had the price weaken into our entry at the level of 2395, the price went up to 2380, and from there we had a massive accumulation um, towards the highs at 2879. The price met high. This would be an exit, or this was your exit. You can always stay in the trade till however how long you want. Here, looking at the previous price action, a lower low, and after that we had a change of character followed by a break of structure continuation, giving us the indication that the price in an uptrend for scalp. A lower low was made. That means we are still in the bullish bias. After the lower low was made, break of structure. This is a step-by-step thing that we'll be looking at to identify our order. Now we're going to be identifying our order block. We had change of correct. So for the scalping, we're going to be looking at the 15-minute chart, and we obviously are going to look at the daily bias. So now over here we can see the price made a lower low. So we've got a lower low. As we can see, the price pumped from here, followed by a retracement and a continuation. Bullish bias will be confirmed. Then we are going to be marking our liquidity levels. So these were our liquidity levels. We're going to wait for the price to take this liquidity, and then we're going to be identifying our order block. So on the 15-minute chart, this is what our order block looks like. A perfect red and a green candle before the price started moving towards the upside. Now on the 15-minute chart in the scalping, we can go with really good sniper entries. After that, retracement, and then followed by, so this is the 15-minute order block to identify the order block in a lower time frame, and to get the sniper entry, we're going to be identifying the order block on the 1-minute chart. This is our 1-minute chart order block. You can see if you saw that in the 15-minute chart, you won't be able to um, identify a sniper entry for your trade instead of putting a stop losses here and entering at the top here, we have narrowed the entry down with stop loss at the least as well. So how is our entry going to look like? So the entry would look like this for the 1 minute scalping. Entry on the order block, stop loss just below the order block, and we're going to be targeting a previous high. So you can see we've got 1 to 3 risk to reward ratio. You can target more higher highs, but to stay safe and to make regular profits, we're going to be looking at targeting this higher high, previous high. So as you can see, the price took a bit longer, but it did tap our entry. The price went up all the way up to 24.80, 25.84. Entry at 25.03. This is the best example for the scalping on the order block strategy. So this was the order block strategy that I use in my personal everyday trading, and you should be backtesting this strategy before you implement it. But I have tested this strategy 100, 200 times. This is not a financial advice, so you should be taking care of your risk management as always. Do not let your trades run, and always use a stop loss. Alright, thank you. I'll see you in the next video.